Greetings everyone, long time no see. As some of you might already know, my name is Phil, I'm with Pragmatic Trading, and it's really nice to be here with you after a 7-day break. So I have said many times in the past week and a half that when I have a huge winning streak, when the greed is just behind the corner, I have some things to do to stop my greed. So, you know, the whole market is based on greed and fear, right? Greed at 69k and fear at 15k. So, in the same way, each one of us has their own greed and fear problems. So, one of the things I do when I'm on a huge winning streak is that I turn off my computer, I plan a short vacation, a short trip, and I get some beautiful off-screen time. I simply enjoy life. So if you don't have ideas how to stop your greed, well, you can take my idea and you can thank me later. So welcome to another analysis. Before I start talking about what's happening now, what has happened in the past 2-3 days, and what might happen in the future according to my analysis, I want to do a quick recap of what did I have to say before all of this happened. Okay, so yes, we have a very bullish candle, if I can call it like that. I'll tell you why. But before we talk about that, let's do a quick recap. So I want to focus on two posts. One of them is my post from October the 20th, and the second post is from a guy that I respect very much and I admire him. He's one of the true alphas out there on crypto Twitter. His name is Lucky Chart Ape. He is sharing a lot of useful analysis, so if you want to follow more alpha, besides me, feel free to follow that guy. He's one of the few people that I'm following on Twitter. So, let's jump to the post number 1. What did I have to say? This is why divergences are golden. Their invalidation or validation can show you where we might be headed next, so you can be positioned in both directions. It's invalidated, so we went higher, much higher. At the time, we were somewhere around 28.5, 28.7 area. Now, I think I shared a little bit of my wisdom with you. And of course, I'm not the only one. Let's see what did Lucky Chart Ape have to say. He says, analysis is not about having one idea that can never be invalidated no matter what happens. You can have a primary thesis, secondary, etc. If an idea is invalidated, you cut your positions based on that idea and adjust your bias. I have no problem changing my primary thesis based on price breaking or claiming levels. So he has no problems changing his bias or thesis. I have no problems. Why should you? Okay? So those are the wise words of a wise man and a wise trader. So guys, I'll keep saying this in my analysis, but I'll say it again now. When you analyze the charts, market will always go where the liquidity is. It will go up and down, and even before it goes up like this, it will go down, or even if before it goes down, it will go up like this. Okay? So having two scenarios is not something you can do, it's something that you must do, it's something that you need to do, and it's something you have to do. Okay? End of a discussion. Okay? If you always stick to one idea, if we always follow one direction, one type of targets below or above, it's only a matter of time before you will get invalidated or, let's say, humbled down by the market. Okay? So I don't want to spend more time by talking about what I have already said, right? I encourage you all to follow me on Twitter. My username is PragmaTrader. My name is Pragmatic Trading. I post all of my updates there when I don't film my weekly analysis. I always have 1 to 2 to 3 weekly analysis. So follow me on YouTube too. My name is Pragmatic Trading. It's the same name. Now, I don't want to spend a lot of time showing you what did I do. I had some beautiful scalps, beautiful swing trades. I shorted every pump. I got stopped out multiple times, but my winning streak has just been continuing because my risk management is all fine. Okay, Now, I just want to show you this one. Last night, I marked two targets, 32.3, 32.5, okay? So memorize those numbers. I will show you in a few minutes why those numbers are important, okay? I took these two crazy shorts, okay? Both of them were market order because the pump happened too fast, okay? I couldn't place my limit orders, even though I could have, but I didn't. I was on a fishing trip and I didn't expect Bitcoin to pump this fast and this violently. So, what are my entries? 34.9, 34.4, and now exit price is important. 32.6, 32.5, 33.5. So this position here was secured earlier, but this one was kept a bit longer because I believed we could revisit this area. Now, why am I showing you this? I don't want to brag about my victories, about my losses, etc. I just want to show you what am I seeing, what am I trading, and what is behind all of those things. So I hope I didn't take a lot of time from you. Let's get to the analysis. First, what do we have here? Well, we have a breakout of this months-long range. We have two very strong weekly candles, and now currently we are experiencing a rejection. Where do we reject from? Okay? That's the question that you need to ask yourself. And always, one random guy said a very wise thing before. When I learned from him, he said always look to the left. Okay? Of course, past performances do not indicate future results, but we should always look to the left when we analyze. So what do you see here on this weekly chart? What happened before the FTX crash and before we went to 15K? We had this January-March range, which lasted for a few months, and that range had some supports, right? It has support, it has a resistance, just like any other range. So I will turn this on. You see, this area of support could be confirmed as resistance. Now, I'm not saying we won't go above. I'm not saying this is the confirmation of a bear market, okay? I don't want to make crazy claims. I'm just showing you what I see, okay? So the context is, yes, this is the breakdown of support. Why is that? Well, isn't it obvious? This was support. We broke down, so that same area could become resistance. I am emphasizing the word could. It doesn't mean it will happen, but it could. And that is the context that I see. Of course, is this structure, is this price action, is this rectangle the only tool I can use? No. Is there the best tool out there? No. You can use all of these tools, okay, all of these tools, and they are all useful, equally useful as long as you know how to use them. Okay, I'm repeating myself, I know, but never mind. Now, let me show you what did I have here. So I had the macro ascending pitchfork, which is regular. I usually use Schiff's pitchforks, but this one is a regular one. And isn't this beautiful? Okay? The same area, which is a structural retest, is the same area where the top of the pitchfork is. And what did I tell you many times? Whenever I mention the pitchfork, I always say top of the pitchfork is the best place for a short. Even though you lose, it's the best place that's worth the risk. Bottom of the pitchfork is the best place to long, or these fib levels here, right? So we already have two macro targets meeting at the same place, okay? Of course, I didn't show you this. Why? Well, first and foremost, I was on a fishing trip, okay? I wasn't here near my screens. Maybe I would have shown you this, maybe I wouldn't have, doesn't matter. Is that the only thing we have? Of course not. Let's do some pools. So let's take a look at this retrace, okay? Let me take the path. Alrighty, so I want to measure the upwards potential of this downwards retrace. Okay, how do I do that? Well, I can do it in many ways, but I use this pool here. And voila! What do we see? The first golden pocket level here. is exactly where we rejected from. Okay, now I'm gonna zoom in a little bit. Of course, there is a small deviation, but I'm just showing you how macro tools, macro levels can produce a macro reaction. So whoever had enough courage to short this, I congratulate them personally, because shorting this kind of a move and fading it is very, very brave, and you need to have a lot of knowledge and a lot of courage to do that. Okay? So currently we are experiencing a rejection, and when I look at this chart, I see three tools. One of them is price action, structural retest, previous support could become resistance. I see one scalp pull, and I see a beautiful pitchfork. 3 tools, and you have this strong move and reaction. Isn't this beautiful? This is one of the biggest reasons why I love trading and analyzing the charts. So let's turn these off. We don't need them. We know what had happened. Okay, let's see what is happening now, and let's get back to my 32.5 targets. Why do I talk about those targets? Well, last night before the pump, I was on my computer, and I realized something is cooking. Okay, and I had these 2 pitchforks. Give me a second. I want to use this one first. Okay. So yes, it's a macro pitchfork, but it's way smaller than this one that we had here. What is interesting about it? Well, what happened at the top of the pitchfork? I know, I told you, top of the pitchfork is a good place to short. Yes, it's worth the risk, but that does not mean that it will reject every single time, okay? Why? Because, well, sometimes, as I said in my previous videos, please feel free to watch those videos. I've said this multiple times. Yes, sometimes we will deviate and retrace, sometimes we will reject instantly, and sometimes, if we break this level, the move will continue in a violent way. What did I have to say about the median line of the pitchfork? It's also a very important level. Okay? So I said when we get to the median line, usually we dance around it and reverse, or dance around it and continue the move in a violent manner. And that's exactly what had happened. If we want to measure the move, well, why not? Let's put it here, 27% rise, okay? So this is what my experience tells me, and this is what I have learned throughout the years. Now, why is 32.4.5 level important? I'll mark it here on the chart. Well, it is a level that we broke out from, right? Yeah, maybe we can draw the horizontal line from this top, etc. Never mind, I don't want to be so precise. There's no need for that because this is a midterm analysis. To me, this is a very important level because if we are going to retest something below, that will be the level that we will retest. Why? It's a macro level. It is a breakout point, okay? So naturally, if we reject, and yes, we are rejecting, we will keep going down up to that level. Then what will happen? Well, I do expect some kind of a bounce. And now $1 million question. What will happen next? Will that bounce produce a higher high? Will that bounce produce a lower high? And then a rejection? Well, my dear people, no one knows. What you should know is that this level is crucial for the next few days or maybe for the next week. Now, excuse me for a moment, my throat is very dry. I need to cough just a little bit, okay? Alrighty, I'm back and I'm already feeling better. So I would pay great amount of attention to this place here. Why? Well, here we should bounce. There will be some beautiful long opportunities. I do have 2 short entries from the top of this week, around 35.1. I added to my position today aggressively because I do expect us to go back to this place. So here you can take profits from your shorts. This is not a financial analysis. I am not your financial advisor. I'm just telling you what I will do with my trades. How will I manage this area here? So I will exit my shorts here, or at least partially, maybe close 70% of them, and I will look for long entries in this zone. Why? Well, breakout retest continuation. Now what will happen next? It is foolish to say. Now if you watch Twitter, if you watch at all these posts, you will see that people are claiming the bull market is back, the bear market will continue. If you ever see people claiming that the bull market is back, you should know that they are foolish. And they do that only for the engagement. They don't want good for you. They just want your likes, your engagements, etc. If you see people claiming, okay, this is a bearish retest, we go to 10,000. Well, they are the same. Perma bulls and perma bears are the same, okay? You shouldn't care about that. You are a trader and investor. You trade and you invest in these zones and levels, and you do things according to your own plan. You shouldn't care what those foolish people say, okay? So I can do some pools, so we can do a thorough analysis right now, but I don't think that's needed, okay? I don't want to lose your time. The video so far has been very useful. I've shown you some very useful things. Now I will be very bold and, let's say, brave to say that we might expect some strong reaction at 32.5 zone, 32.4, 32.5, etc. Now the big question is, will we continue going down from here, or we will maybe make another wicked high, like wicked high pun intended, and then go back? Well, no one knows, but what you can do is you can work with what you have. How can you do that? Well, let's work with what we have, right? This is the Bybit chart, this is the Binance chart, okay? Now, why am I showing you two charts, and why is this RSI so big on my screen? Well, there's a big reason for that. Where is the top of the wick on Binance? 35.3, right? Where is the top of the wick on Bybit? 36.7. That's a big difference, right? So when you have different wicks, the targets become different too. That's a problem, but every problem has a solution, right? Every problem has a solution, especially if you're objective and pragmatic. So let's go back to the lower time frames. For example, let's go back to the 4-hour chart. Let's zoom this RSI in. Okay, let's take a look at the 1 hour first. I'm sorry. Now, what did we have this morning or last night? We had, let me see. This is strange. Now look at this. This is really funny and strange at the same time. Look at the 1 hour chart on Bybit. What do we have here in the RSI? We have a lower high, and we have a higher high in the price action. That's a regular bearish divergence on 1 hour. Now on Binance, you can't find that because we have, sorry for laughing, we have a higher high in the RSI and the higher high in the price action. Now what's very interesting about it? Well, if you turn on the 4-hour chart, Bybit, you will see that we have a higher high in the RSI and the higher high in the price action, right? So that means no divergence. If we take a look at the Binance chart, same pair, okay, perpetual futures, what do we have on the 4-hour? Let's turn it on. We do have equal highs, or a lower high that's a little bit lower than the left one, and we have the higher high in the price action. So what is that? That is either a regular bearish divergence in the 4-hour on Binance or an exaggerated bearish divergence. What is the difference? Well, the exaggerated is a little bit weaker and the regular is stronger. Are we curving down? Yes. Is there a possibility we retrace from these levels? Yes, there is. Now, there's a catch with divergences. You know that the RSI line in the RSI is being created only when the candle body is created. So please do not use wicks to find the divergences and look at the RSI. The wicks in the price action are not, I repeat, they are not included in the RSI. So you only need to look at the body candle close. Okay? Candle close. Their bodies. So what is a trick with the divergences? Sometimes, okay? Sometimes we can have a formed divergency, right? Just like here, okay? And price action can wick higher during the next 4 hours, if it is the 4-hour time frame. It can wick higher to liquidate all of early shorters, and then it can go back to play out the divergence easily. So you have to be very careful. It is there, but yes, it can get invalidated because it's pretty small, and it can wick higher to liquidate these shorts before going down again, before playing out. Okay, so that is what I see. I only see a possibility of us going back to 32.4 and 5 and 3. I don't know if that's gonna happen now, but I am positioned. I have long limit orders here. I am in a short, and I have more limit orders above in case we wake up and go down to play out the divergence completely. So I am fully hedged, and that is what I'm trying to teach you. Always be fully hedged, always be prepared for every single scenario out there. So let's not make this video too long, okay? I will wrap up this video by thanking you for taking your time to watch my analysis, to hear what I have to say, and you should know that I admire every single one of you out there that who are supporting me. So if you want to support me further in my work, please consider liking this video, sharing it with someone you know, and of course leaving a comment. I truly want to know, what do you think about the price action, what do you think about this move, what do you think about divergences or anything else that you want to talk about. Okay, besides that, follow me on Twitter because I don't have time to make the videos all the time. Okay, I will edit my own videos by myself, so that takes more time, etc. So if you want to stay up to date with what I think and see on the market, please follow me on Twitter. My username is PragmaTrader and my name is Pragmatic Trading. Once again, what do I expect from this week? I'm sorry, and from this week. That was an accidental joke. What do I expect? Well, I do expect us to reach 32.4, 32.3 or 5 as a retest. I do expect a bounce there. Now, what will that bounce bring? I don't know. It could be a lower high and then a continuation down into the pitchfork, or it could be another higher high, which could be a deviation before going lower, or it could be the continuation of the whole move up. I don't care. Why? Well, I will trade all of these outcomes, all of these scenarios, and as pragmatic as I am, I will never care about the outcome because I will always be prepared for every single outcome out there. So that is what I expect. Will the retrace happen from this area, or will we go higher and then form more divergences and then continue down once again? I don't know. I will secure my profit, but I have literally shown you every single possibility that I see on the market. Now, I wish you a beautiful rest of the week. Please stay cautious because we have some news today, we have some news tomorrow, etc., some readings, etc. So please mitigate your risk, stay pragmatic, stay safe on the markets, and I wish you all a successful week. As always, your favorite trader out there, Pragmatic Trading, loves you. I'll see you next time.